So, India's tax system, which is one of the biggest and most complicated in the entire world, just went through a radical makeover. We're talking about a change that's going to touch everything, from your grocery bill all the way up to the national economy. So let's break down what's really happening. Here's the deal. In September 2025, the Indian government greenlit a massive simplification of its goods and services tax, the GST. That's the tax you pay on pretty much everything you buy. And frankly, it's been a major headache for both businesses and regular folks ever since it first rolled out. And that's the real question, isn't it? What does this huge shift actually mean for businesses that are scrambling to keep up, for your wallet, and for the Indian economy as a whole? That's exactly what we're going to dig into right now. To really get why this reform is such a big deal, we need to take a quick look back. Why was this change even necessary in the first place? Let's retrace the steps that got us here. So before 2017, the system was just this wild patchwork of different state and central taxes. It was confusing, it was costly, it was a mess. Then 2017 comes along and we get the first GST, with this big promise of one nation, one tax. The problem? It was really more like one nation, many taxes, with four main rates that still created tons of confusion. And that brings us to today, or 2025, and this latest attempt to finally get it right. The problem was really buried in the details. See, having all these different tax rates meant endless arguments over how to classify a product. Stuff like, is a chocolate-covered biscuit a biscuit or a chocolate? And believe it or not, debates just like that cost businesses, especially the small ones, a huge amount of time and money. The whole system was just crying out for something simpler. All right, so that covers the why. Now let's get to the what. What did the government actually change in this huge overhaul? You can see the core change immediately when you put the old and new systems side by side. We've gone from that messy four-tiered structure to just two main rates, 5% and 18%. That alone is a massive simplification. And what's really crucial here is that a lot of essential items are now taxed even less, while luxury and so-called sin goods get their own, very clear 40% tax bracket. The goal is pretty straightforward. Make life cheaper for the average person and a whole lot easier for businesses. So instead of that cluttered old structure, we now have four really clear categories. Essentials are at 0%. Common goods are at a low 5%. A standard rate of 18% covers most other things. And then you have that high 40% rate for sin and luxury items. This is exactly the kind of clarity the 2017 system was missing. So this is where it really matters for your daily life. We're talking about things like packaged foods, personal care items, and even some services. They're all seeing their tax rates drop. The government is basically making a bet that by making these everyday things cheaper, it'll ease some of that cost of living pressure for millions of families. But let's be real, a tax cut this huge doesn't come for free. The government figures it's going to lose around 48,000 crore rupees in revenue every single year. Just to put that in perspective, we're talking about a revenue hole of roughly $6 billion annually. It's a massive calculated gamble. They're trading direct tax income for a potential boost in the whole economy. Now, a change this big is never neutral. There are always going to be winners and losers. So who really stands to gain from this new tax system, and who might be facing some new challenges? Okay, on the upside, consumers are the clear winners here, with the potential for lower prices. The whole economy could get a nice little jumpstart. And for most businesses, life should get a lot simpler in the long run. But then you look at the risks. The government has a big budget hole to fill. Industries that sell luxury goods are facing a serious tax hike. And maybe most importantly, small businesses could face total chaos just trying to adapt to these new rules on such a tight deadline. At the end of the day, it all comes down to this. The idea behind the reform is solid. It's designed to make things simple and boost the economy. But an idea is only as good as its execution, right? The success of this whole project really hinges on one thing, a smooth implementation. So, that brings us to the final and most critical question. Is this massive change actually going to bring clarity to India's tax system? Or is the transition just going to create a whole new kind of chaos? And this is exactly why there's a real risk of chaos. Businesses were given a very short window to get all this done. Imagine you're a small shop owner. All of a sudden, you have to update your software, reprice everything on your shelves, retrain all your employees, and change all your paperwork. It's an absolute race against time. This is what the experts call transition risk. It's that danger zone when you're moving from an old system to a new one. If invoices don't match up or tax credits get delayed because of software glitches, businesses could face really serious cash flow problems. This is where that dream of simplicity could easily turn into a short-term nightmare. So, what's the verdict on all this? Well, it really seems to be a case of short-term pain for long-term gain. Yes, there are almost certainly going to be some bumps in the road. There will be confusion, there will be frustration as everyone adapts, but the long-term benefits of a simpler, more efficient tax system are very, very likely to win out in the end. And that leaves us with one final, and absolutely crucial question. The government has done its part. It's cut the tax rates on a lot of everyday items. But the real question is, will businesses actually pass those savings on to you by lowering their prices? Or will they just pocket the difference as extra profit? Ultimately, the real success of this great tax overhaul will be measured right there, in your shopping cart.